we are sitting down. My name is Rejeana. This is Callie.
I'm Callie.
Yeah, and we're going to talk to you today about the Canadian market situation, what's going on now, kind of how we got here in this environment, and then what we see coming in the next 6 months to 12 months from now.
Yeah, and we'll take questions at the end. So if you guys have any questions, we'll answer them at the end, or you can drop by our booth. We have a crop marketing booth down there in the trade show. So come visit us, please. Okay, well, we already did this, but...
We did, but actually I wanted to tell you just a little bit about myself. So I'm from Alabama, even though I do focus on the Canadian markets. I work from home in Alabama. I did grow up on a farm. We raised catfish for years, but now we primarily do hay, and we actually have to buy our hay cutters. We use Krone hay cutters, and they usually come from Minnesota, North Dakota, or Canada. We shop in Canada too. So I do live on the farm, and I work with Kevin McNew, and I went to Auburn, Purdue, and then Texas A&M, went all the way, and worked for a firm called Informa for about 5 or 6 years, became head of grains research there before I left and joined the FBN team. So I've been here about 3.5 years and have between 9 and 10 years of experience working in grain markets.
I'm Callie Luck. I'm the manager for Canada for crop marketing. I grew up on a farm, a grain farm in Dinsmore, Saskatchewan. I don't know if any of you know where that is. And now I live in Tisdale, where I help on the farm with my husband. I got reduced from combine operator to like part-time grain cart. And I'm still a little bitter about it, so. But yeah, well, I'll let Rejeana take it away. She's going to do most of the talking today.
Yeah. Before we get too deep, I do have to read the disclaimer. So this presentation is intended for informational purposes only. It is not intended to provide specific, individualized tax, business, investment, or professional advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties expressed or implied as to the accuracy or completeness of the statements or any information contained in this material. Commodity trading, including futures, hedging, and speculating, involves substantial risk of loss and may not be suitable for all investors. All right, so again, we're going to talk about how we got here, what's currently going on in y'all's market. Some of that is coming from what's happening in other countries around the world, so we'll touch on some of those key points. And then we're going to discuss what we see coming for 2023, particularly with the price environment among your key commodities. So these are just some of the key things that have happened the past 18 months or so that have been impacting ag markets. So last year, Brazilian corn production slipped. So remember, Brazil has 2 corn crops, summer, winter. Summer corn's being planted now in conjunction with soybeans. It's about done being planted. Last year, the safrinha, or the winter crop, which is what goes in the ground after beans are cut, we had big production losses there. Part of that tied to La Nina. Remember, y'all had a drought last year. You weren't the only country. Brazil was very dry during the summer growing season. So we had some pretty big losses there. Y'all also had drought losses as well, like I said. Of course, then we get big prices in input, big price increases for inputs. We again have some corn crop losses in Brazil, higher interest rates, of course. Then Russia invades Ukraine, sends wheat market skyrocketing, which we'll talk some more about that. Then this year, y'all's crop actually rebounded overall. I know some of you still had problems, but overall, Canada had a much larger crop this year. Argentina, however, has had some pretty significant wheat production losses. On the flip side, Australia's crop, even though they got thrashed with rain, their crop is big. It's a monster of a crop. Very wet down there, and we do think we know there'll be some quality issues with wheat. So for the small number of you that grow white wheat on the West Coast, you'll probably benefit from that. And right now, it still is dry in Argentina, and so Argentina is in the midst of planting corn and beans. It's not looking too good down there, and there hasn't been much rain, and that is not changing, at least in the 10-day forecast. So I know futures prices have come off the highs that we have seen, but I want you to remember where we were 2 or 3 years ago, and we certainly were nowhere close to where we are today. Overall, futures prices remain elevated. Corn prices, they certainly have come off the highs. Every commodity has, essentially. But we're still looking good for canola. We're still looking good overall for Minneapolis. Maybe it's not the $12 you wanted, but I think we're sitting right at $9, which isn't that bad. And we're still up from where we were, again, a couple years ago. So just remember, we are in this high price environment, not only on the input side, but also on the commodity side. And the good news is that overall, we see this environment maintaining, which of course we will get into more detail as we move forward. So what's going on domestically? Remember, last year you had a short harvest season, a short crop, and as a result, your exports were down substantially. And even though exports were down because production was so low, you have an overall tight stocks situation as we rolled into this year's harvest. And even though we've got a big boost in production this year versus last year, the good news is that the stock situation overall is not expected to change much. Yes, we have more supply right now today than we had this time last year, but at the end of the crop year, we're not expecting this big burdensome supply situation for any of your commodities. We are exporting, not at the pace that we'd like to, but they have been picking up here recently, our weekly exports, which of course that we track. Your domestic demand remains great. You're not bringing in as much U.S. corn as you did last year because you have more free feed grain availability. Overall, basis remains pretty strong, and cash prices remain pretty strong. Again, off the highs that we saw last year, but hey, you got more to sell. So prices are still good despite the production rebounds. Again, we're up across the board for production. This is for most commodities, but I focus primarily on canola and wheat and barley for y'all. We did survey our members to get we polled y'all to get some information about yields, and I want to thank you, those who did respond. Y'all help us nail canola expectations. We did great on that crop. We missed spring wheat and barley a little bit, but it was nice to see members contributing that information, so thank you. But again, even with these boosts in production that we are seeing and that we have seen this year versus last year, the stock situation, again, not expected to be burdensome by any means. We expect to remain in this overall supportive price environment despite the big increases in harvest that we have seen. StatsCan came out Friday, right? This chart represents those updated values. They cut back canola. They cut back wheat production, including durum. Surprisingly, they added to barley. That was the one crop that surprised us, really. We weren't looking for that increase in barley production quite as large, but they increased harvested area as well as yields there. So we'll talk a little bit more about barley, especially its relationship to oats, but that was the biggest surprise for us out of StatsCan. We'll see if they revise it later. For what it's worth, they do revise production numbers for a couple of years. Usually we get revisions on canola, not other crops, but we'll see. So again, basis remains elevated. Y'all have got some amazing basis prices overall for WRS. Canola has come off the highs. It seems like the processors or the crushing facilities really needed that canola once harvest got well underway. And since then, maybe along with some farmer selling, those basis levels have come off. But overall, still a very strong basis environment, particularly for wheat, and better than average, at least for canola. So these charts are just showing the average that we have across Canada. On Mondays, we write about basis comments, and we do break it down by province. So I encourage you to look at that, or as always, to contact an FMA to discuss basis opportunities. But WRS remains very, very attractive. I mean, you're talking 2 to 3 over in some of these locations, which is amazing. That makes your cash price very attractive. And part of this is, of course, on the demand side. Stocks going into this crop year very light. We think that facilities have been needing to backfill, but not only that, high protein wheat supplies from last year's harvest were down because y'all and the U.S. both had a drought. And we are the dominant exporters of your high pro spring wheat. So Kazakhstan as well also had a drought last year. They also grow spring wheat, and they do export some. And so all 3 countries had bad harvests. So that, in and of itself, everybody basically across the world needs to fill in their pipelines for high pro wheat. And so that has really helped support your basis. Again, we're not quite seeing the export numbers we like to see, but they have been picking up for both y'all and the U.S., and we expect that to continue. Barley and oats. Barley is very interesting. I enjoy studying this market. And when you look at the global barley situation, it is very tight. It doesn't get a whole lot of attention like corn, beans, and wheat do, the big three, or even canola. But the barley situation globally is very snug. Australia does have a big crop, but it's not big like the wheat and the canola crop are because they cut down planted area there like y'all did on these high input prices. So the global barley balance sheet, say that 3 times fast, is tight. It's the tightest balance sheet we've had in decades, okay? And this is one reason why we are seeing some supportive barley prices. Of course, again, domestically, y'all stock situation tight going into this harvest, but barley prices have been supported. I know they've come off the highs. We expect them to remain supported. And interestingly, versus oats, oats are the opposite end of the story. Oat prices are horrible. Y'all had a big oat crop, and that has really pulled back oat prices. And so the red on this chart shows when barley is trading cash prices. When barley is trading at a premium to oats, and the blue is vice versa. Normally we're not in the situation that we are today, where barley is a lot more expensive. Now, we do think there's some upside potential for oat prices. We just think it's going to take a couple of months into 23, calendar year 23, for oat prices to really get any strength. But we do think that given the discount they are to wheat, cash wheat, and then also barley, it should pull a little bit into the feed market. Y'all are shipping some to the U.S. as well. And we do think that's going to end up helping support oat prices relative to where they are today. I don't think they're going to be where they were a year ago, but I think that they will improve some in the next few months. Barley prices overall, we may see a bit of weakness from this production that came out on Friday. However, given the global situation, I don't think that we're going to get a ton of weakness from the barley markets for the rest of the crop year. So I'm going to switch it over now to Callie because I don't know much at all about flax.
Well, I can't say we grow flax, but so Durham, you guys have probably seen this, but bids were off to a strong start. We've seen a slowdown now with the freeze up due to the Thunder Bay. We've had larger crops out of Kazakhstan and Russia, so they're putting in the market there. So they've been bigger there. StatsCan, you guys probably saw that number. Durham's smaller, so that will be supportive. We'll be looking for an increase in bids later in the year, early spring.
Yeah, we should see Durham prices improve from where they are today. USDA will revise the U.S. crop coming out in January, and they've already cut back that crop. Market suspicion is that it could be lowered even more. The U.S. did win a cargo out of that recent Algerian tender. I suspect Canada won some too. So we know that we're competitive. When we look at global prices, Canadian Durham is competitive as well. However, I don't think that we haven't exhausted this market yet. We do think that there will be some upside for Durham moving forward because remember, again, high pro wheat supplies globally were down last year, and we're still backfilling a good bit of that demand.
With flax, the crop was above average quality. So, and we've seen, large Russian and Kazakhstan crops fulfilling the European and China market. So the only market kind of available for you guys is US, and they haven't really been buying at these prices. And farmers are also reluctant to sell their flax at a lower price. So we're a little bit worried that this could lead to a balloon in ending stocks that's going to weigh on the market. Peas. So peas. Demand's been slower for peas too, with a combination of slower exports and then also farmers being reluctant to sell their peas as well. So we expected demand from the US, but we haven't seen that yet. In India, their pea prices are lower, so that's discouraging acres, so that's a positive for us. But for yellow peas, as you guys know, China's the big buyer. So right now, soy meal, yellow peas aren't discounted enough there to encourage buying. And then I'm sure you guys have seen in the news with everything happening in China there, COVID-0, the lockdowns, the protests, so that's also weighing on the market as well. We see more potential in green peas because they're not as dependent on China. They have more places to be exported. Red lentils. So exports off to a great start with red lentils here, and StatsCan actually reduced lentil production as well for Canada. The big question there for everyone is Australia. I'm sure you guys have seen this in the news, but it's raining a lot. And we all know that lentils don't like rain, so there's concerns there with the quality of lentils, but those lentils will still find a home, even if they're kind of downgraded in quality. Actually, South Asia is quite happy to purchase kind of lower quality lentils if they can get a discount. So those lentils will still find homes. They'll displace some of the Canadian supply, but with the lower production here in Canada, some stats we're really going to be looking for India to come back into the market a little bit later to kind of up some of those bids.
Yeah, and speaking of lentils, A-Bears did come out Monday. That's the equivalent to StatsCan, but for Australia. They put the lentil crop at 1.1 million tons. Now, most of Australia's lentils are grown in areas where they had substantial rain. They did discuss quality impact, a lot of wrinkling, some discoloring. However, they didn't cut back the crop that much. It's actually a record lentil crop. We wrote about it, I think, this morning for the chart of the day, so be sure and check that out. Again, Australia's got a big crop. They increased area. Production is up, even with the heavy rains, but they're not through with harvest yet. So we'll see if we have any subsequent revisions there to that lentil crop. Now we're going to switch a little bit more to the kind of the global situation, and I just want to point out, if you don't know, y'all are the world's leading potash producer. Okay, by far, y'all are the biggest potash producer. You ship a lot of that to the U.S., and actually, Canada and the U.S. have a pretty solid fertilizer trade relationship because the U.S. ships a lot of nitrogen-based fertilizers to y'all. Okay, but talking about fertilizer and what's going on in the Black Sea, Russia, Belarus, also some top exporters of potash. And because fertilizer is a global commodity, y'all also are experiencing some high input prices, including fertilizers, even though you grow it yourself. We do a good bit of research on fertilizer prices. A lot of it is tied to the price of natural gas. There is some correlation there. And unfortunately, even though fertilizer prices have softened from those high levels that we were seeing a year ago, the increases started about a year ago, we are not expecting prices to return to where they were 2 years ago, right? But remember, 2 years ago, we had lower commodity prices as well. So unfortunately, on the input side, while we have seen some easing of these fertilizer values, we don't think that we're going to return to that market that we were in a couple years ago for fertilizer prices. I know inflation has been a top topic across the world, not just in North America, and y'all's inflation rates are up. They did come down month over month in the latest report, but we know that we are facing a high inflation situation here across the globe. It's not just Canada, it's not just the U.S. Many countries are facing high inflation, and your interest rates, of course, going up as well. We've had some discussions about that this week already, yesterday, and I think some today as well. This makes buying land and buying equipment, it makes everything more expensive, and we don't see these interest rates falling anytime soon. The U.S. is expected to increase again, at least the Fed is expected to increase again. Canada may be increasing again as well, but the hikes may not be quite as high. But I suspect that we're going to be in this relatively high interest rate environment for some time. All right, the global market. Again, as we discussed, Australia has had some untimely rains. The past week or so, it did improve. They were able to harvest some. Most of this in southeastern Australia, so we're talking New South Wales, Victoria, Queensland, those areas. It has improved, but just to give you an idea of what we're dealing with in Australia, Australia accounts for about 20% of global canola exports. They call their crop canola. They account for about 19% of global barley exports and 9% of global wheat exports. So they are a direct competitor with Canada for rapeseed or canola and barley. Now, Australia still is at war with China. Barley is a target there, so that high tariff is still in place. We do think China will continue to come to Canada for barley, although our exports to China so far are down substantially from last year at this time. We do think that China will come back. Australia has had harvest delays. I don't think it's really impacted global trade situation much. Western Australia is a top producer, and they didn't of these commodities, and they didn't have the weather issues that southeastern Australia did have. What it has done, though, is it's created some big discrepancies in their prices domestically, as well as export prices. We know for especially the southeastern areas, are going to have a lot more feed wheat than they normally do. A lot of that will be going to Southeast Asia. That's Australia's top market anyway. Some of it will go to feed markets. Higher quality, of course, will go to noodles. But we think that Australia is going to have an exceptionally large portion of their wheat crop that's going to be feed wheat quality instead of food grade quality. And so, again, for white wheat producers, not many in Canada, should be some opportunities for the rest of the crop year. The Black Sea. This has been a huge topic, and my colleague Kevin and I, we did a big report on the Black Sea situation 6 months from where it was in February. So I think it was released last month or so. So if you're interested in kind of seeing a big picture of what's going on there, I encourage you to check that out. But basically, they're just not shipping the wheat or the corn or the barley that they need to be shipping. So Ukraine is the chart on my left, hopefully your left. Russia, the chart on the right. And Russia's exports have improved, 4 million tons or so a month. That's great, but we need more out of Russia. Okay, and so what we're seeing is that globally, global wheat trade overall is down, not much, but it's down some from last year. And some of your top importers who do rely heavily on Ukraine and Russia just don't have the wheat imports they normally would have this time of the year. So we're still waiting on these countries to come to other countries for wheat, the U.S. and Canada being those. Of course, most of the wheat coming out of Ukraine and Russia, not exactly a substitute for Canadian wheat and vice versa, but we're just not seeing the interest yet, particularly in the U.S. And that's important to y'all because of Kansas City. Kansas City futures do tend to trade very in tune with what's going on in the U.S. hard red winter wheat market. And one of the reasons that we've lost some steam in that market is because we are just not getting that export business that we thought would come to us based on what's going on in the Black Sea. Russia, as you can see seasonally, so that black line is the 5-year average. Usually their wheat exports peak right after harvest, okay? Their wheat mostly is winter wheat, about 2/3 is winter wheat, about 1/3 is spring. So exports normally are peaking a couple months ago. They tend to shut down more or less, or at least move a lot slower in the winter, like y'all do, okay? And so what we're gonna have to see out of Russia for the rest of the crop year is exceptionally high exports. We're gonna, high relative to what they normally would ship this time of year. And we're just not confident that's gonna happen. So we're not sitting here and saying that wheat prices are going to just take off from where they are today. There's a ton of volatility in that market, and it's going to remain, right? These markets are going to remain volatile for the next several months. I know we're up substantially again today, and we were down. I got lots of phone calls Monday while I was on an airplane asking me why wheat prices were down so much. I don't know. Putin, what did he do? They're up today, so it's all good. All good is in the world. These markets will remain volatile. Old crop futures, okay, are close to being fairly valued, all right? So I don't think winter wheat and spring. So I don't think we're going to sit here and get a massive boost in any of these markets for old crop. What I will encourage you to do is to look closely at new crop values and consider making some sales, because given these input prices and what we think is happening or did happen with the U.S. and winter wheat acres, we're probably going to see a boost in North American wheat acres next year, including spring wheat. And we do think that Minneapolis is going to come off the levels that it is trading at today for new crop versus new crop. So just keep that in mind. We communicate that with the team. But preparing for next year, I think that's something to remember. Global exports to date. I touched on this with wheat, and I just wanted to show you the canola or the rapeseed chart. So the big exporters of canola, us, Canada, Australia, Ukraine also exports it. Most of Ukraine's goes to the EU, but global exports of rapeseed or canola are down substantially to date. And most of that, I don't want you to look at this chart and get concerned about demand, okay? Because sometimes you'll be shown charts by various people in the industry and like, look, demand is bad, look at trade. No, trade is down because y'all's harvest in 21 was so light that you weren't exporting, okay? This chart goes through August of 22, which was before you harvested this year's crop. So demand is still good for canola and rapeseed. Global exports to date are down because of what's going on in Ukraine and because y'all had such a light harvest. We're going to look at this chart next year at this time. It'll be a completely different story. Demand overall, again, for canola, we're not concerned about that. Australia does have a pretty big crop, so they are going to remain a competitor for the next 12 months at least. So 23. This chart shows your acreage changes from 21 to 22. Okay, red is lower, green is higher. So what did y'all increase last year? Y'all increased wheat acres, you increased oat acres, you increased corn acres, which of course, not grown everywhere across the prairies. Small corn acres there. But you cut back on canola, barley, and peas. Now, given that overall we are expecting a similar environment during the planning decision window, right, when you're thinking about penciling or when you're penciling in your crops and your decisions for next year, we don't look for a lot of changes versus where we were last year. Okay, so we are expecting overall similar patterns for barley. The Australian producer, we were able to kind of figure out what they were going to do because they followed y'all's footsteps, right? They cut back on barley area, they increased wheat area, and canola area wasn't changed too much. And y'all gave us some insight onto that. We think that we're going to see a similar pattern again this year. That y'all are going to cut back on barley area. It's a little expensive. You're probably going to cut back on oat area just because prices are so bad. We don't think that we're by any means buying an oat area at these prices, but we do think that we're going to have an increase in wheat area. Maybe not of this magnitude, but we may have another year of increases in wheat area. So when we put all that together, we think about canola. So canola next year, what are we going to do? What's our marketing plan? I would say acres in Canada at this point, we're expecting flat to lower given where prices are. And overall, not a big shift in prices, okay? We'd have to get a pretty big cutback, I think, in canola area before we saw prices move a lot higher. I think canola futures in the $800, $900 US dollar range. I know that's a wide range, but $850 plus or minus. I think they're about fair value given the global situation that we're facing today. So not a lot of upside potential without a production disaster, which at this point, we're going to be keeping our eyes on Ukraine. Most of their rapeseed crop is planted in the winter. They're occupied right now, or at least parts of the country is occupied. We suspect area is going to be down for their winter crop. So barley, which is about 40% winter, rapeseed all winter, and then wheat, which is about 95% or so winter. Those should all be down. So that's going to be a plus for y'all's barley, also for your canola moving forward. However, we don't look for a massive boost in prices. Part of that tied to the big crop that the big bean crop we're expecting out of Brazil. For wheat, we look for higher acres, as I mentioned, and we do think this is going to pressure prices. We expect higher winter wheat acres in the U.S. We will be conducting an acreage poll on that, so stay tuned. And given what that poll tells us, we will then, of course, share that with y'all and any market insights or steps we think you should take for that. But we do think acres will be higher winter wheat and spring in North America, so we are encouraging you. We're looking at securing some 23 sales already. I don't know how many of you can lock in basis, but I know we've been communicating that with our clients. Durham area probably also higher. So I think it's going to be hard to really get excited about that market moving forward. And remember, if it's profitable for you, it's probably profitable for everybody else in the Northern Hemisphere and possibly the Southern Hemisphere. So we're not the only people who are facing these prices and facing these input costs. So that's always something to keep in mind. Barley, lower. Again, higher input costs. We think we're going to cut back again in Canada. We think we lost some area in Ukraine. So that'll be a plus. And then oats. Just given where prices are today, we think that y'all are going to cut back on acres, which hopefully will result in some higher prices this time next year. Hopefully next year, this time we said, "Bam! Oat prices are great. We knew this was coming." All right. So with that, we'll open it up for questions. Out of wheat into canola. So we're looking at the pattern that y'all did last year and that also that we saw in Australia, and input prices haven't shifted that much and wheat prices have come off. Now, your cash price, of course, is different than the futures prices that we're looking at to determine this. But it's just looking at that, I think that we'll just see a bit more of a pullback in canola just on the input costs in general. But, you know, we'll see where we are in 6 months. Do you think it'll be the opposite, that we'll actually bring in canola area? Yes, yeah. I think it'll just come down to what pencils in best for each farmer. So, anybody else? I know Daniel's got a question. You've been asking me questions all day.
So on your canola, on the export side, the crushers are making really good bank now. So there's lots of seed that's going to end up going there that's not going to be able to hit the export market probably. So with that and with the drying cart of it'll be interesting to see how the canola actually plays out from an ROI perspective and cutting back acres and whatnot. But with, you had mentioned about the peas in the lentil market, there's a hesitancy, it looks like, that if you can make good bank on wheat and canola, why are they going to see peas and lentils? Like, what's your feeling on what's going to happen with those acres?
I want to see with that. I would say I don't want to answer that for sure. I'd have to look into it. We have another specialist who we talked to about acres, but in general, for pea acres, I was going to say we're thinking like similar acreage right now. In the specialty crop, pending next year with flax ballooning, we could see those acres going down because we think there's going to be carryover. Peas will be dependent on China too, right? So if they re-enter this market or things change with their COVID policy, then that could encourage acres. So we'll have to wait and see. It'll be more dependent too on what happens with like India as well for specialty crops. So that'll be something that we'll look a little later on and we'll have a better idea of it. Usually kind of into that like February, March window, we have a better idea of what happens, and that's generally when buyers come back into the market. So we'll see if we can see with red lentils especially, like they haven't obviously been harvested yet in Australia and stuff, so we're gonna see what happens with that. They do have a large crop and then a couple other places where they grow it. So we'll be waiting to see what happens with that. But so far our estimates for what we're seeing are fairly like flat for specialty crops. Otherwise, other than I would say like flax, and then we do some other stuff with like canary seed and rye and that sort of things too. So yeah. Anyone else have any questions? I know, has anyone started thinking about 2022 yet? Have you guys made any sales?
23?
Oh, yeah, 23.
23?
Has anyone made any sales for, oh, yeah.
Sorry, I was just going to ask, the grain that's been not coming out of Ukraine and Russia, you know, like their exports are way down, but I'm assuming that's grain that's sitting there. How long can that grain sit before it's not really good anymore? And has that been factored into the market at all if that grain goes out of shape, basically?
So we need to think about a couple of things. First, quality expectations from our viewpoint are going to be different than quality expectations from other countries' viewpoints, right? They're not going to be quite the same. I think that gives Russia, especially given the countries that it tends to ship to, a little bit larger window of potential spoilage than it would a U.S. or a Canadian exporter shipping to Japan. Okay. However, Russia has had a wheat crop. Not there. Some people are saying it's 100 million tons. Whatever. It's big. 95 to 105. We don't know. They've had a very large wheat crop before. It's been in the high 80s before. I think it's been like 88 maybe. And so we know that they have some storage capacity for this. So it's not like they're sitting here in a situation that they've necessarily don't have any handle on at all. Their storage capacity is probably maxed out. So I do suspect we'll have some spoilage. I'm not expecting that the spoilage to be enough to alter the situation that they're going to have a lot of stocks left over from this crop. I think they'll still be able to ship it out. Remember, China feeds wheat, and we know how old some of China's wheat stocks are, right? Sometimes they tell us that they're dust. And again, Russia is shipping typically to poorer countries who I think will be okay with some quality deterioration overall. So I don't think it's going to turn into something that will be a price advantage to us later, at least not in the next 12 months. Now, if we're in the situation again post this next harvest, then yes, I think that we'll be starting to enter into some dangerous territory. But I don't think that that's going to impact us yet.
No. And where quality comes from, we obviously grow a lot of high protein wheat, good milling quality. So with Australia getting rain, they typically sell a lot of milling quality wheat. So the rains over there are impacting that quality. But like she talked about with wheat over in Russia and Ukraine, we've even seen ships that were holding commodities move to different destinations because some countries wouldn't accept it, right? But it will find a home. It just might not be where they thought.
1 to 3 months.
Yes, I can. And we write about it, usually on Fridays. La Nina has been apparent for quite some time. For an extended period, it is supposed to dissipate into the first few months in calendar year 23. So it's impacting right now the growing season primarily in Australia. That's one reason why they're so wet and why they have had record production seasons, I think 3 years in running. And then the opposite, of course, is the case for Brazil and Argentina, where we have been seeing some dry weather. So at this point, Argentina is dry. It needs water. There is no rain in the forecast. So we haven't started cutting back the corn and bean yield yet from Argentina, but I suspect that will be coming soon. Argentina is about half done planting its early corn crop and probably about 25 to 30% or so planted on bean crops. So there's still time for those crops to improve, but the forecast is calling for La Nina to expand into the first few months of 23, so we are expecting at this point losses for Argentina for corn and beans. We wrote an article on that on the Intel page that talks about La Nina versus El Nino versus neutral years and what happens to corn and bean yields in Argentina and Brazil. So if you do have interest in that, I encourage you to look at it. Wrote it about a month ago. Anything else? All right.
I was just going to add one more thing. I would say for you guys, like Rejeana talked about, our lookout for next year for crops. If you're comfortable getting some sales on, make those sales. But we also kind of are a full encompass service. We do risk management as well. So there's always options. If you're worried about production or something, we have hedging options where you can secure kind of a price floor and still participate in the market. So you can do that without delivery, or you can deliver grain or commit to deliver grain and then still participate in the market as well. So very important to take, to manage the risk on your farm, and every plan is individual based on your needs. So come check us out at our booth and we can kind of talk about your farm and what your needs are. Yeah, thanks for having us.
Thank you.